So, dear all, a warm welcome to this webcast when we will present the quarter one report for the first quarter 2023. Super happy to have you here or joining by this webcast. As always, I will do a bit of the introduction and then I will be joined with part of the group management team. We will have Bo Sandström, our CFO, talking through the numbers, and then we will also invite each divisional head to give a short update on the performance in each divisions during the first quarter. And as you might know, we presented the report yesterday, so you might have seen the numbers, and we also had the annual general meeting yesterday, so together with the board of directors. But let's jump into the numbers as we then presented yesterday. So in general, I would say we are pleased that we had a good start of 2023. So some highlights from the numbers is that we delivered strong growth. So actually the total growth in the quarter was 22%, ending up on a net sales of 6.9 billion, very close to 7 billion in a quarter. So without any question, we have never had such a strong quarter. It was a long quarter from a calendar, but this is for sure a record net sales for AFRY, also when you look back in the history. Out of those 22%, as much as 15.9 was adjusted organic growth. So again, we have delivered a strong growth quarter. But what is really positive in the first quarter is that we generated 10% EBITDA margin. And this is a clear step up compared to a year ago. That ended up in an EBITDA of 689 million. So this is a quarter when we have been able to take that strong growth and also improve our margin. Part of that was driven from a calendar effect, but clearly we have seen improvements in basically all divisions, and you will hear more about that a bit later. What is also very good is that the order stock is on a high level, 20 billion, and that is on historical high levels. So that is also good performance from basically all divisions. And I will get back to that, but we see a continued strong demand in many areas and segments with some uncertainties. In the quarter, we have closed 2 acquisitions. One, Blix, a company in Netherlands focusing on renewables. And then we have Expro, a company in Norway, adding to our project management portfolio in Norway. And of course, right now, for all of us, a lot of focus into the second quarter to really drive operational improvement pricing to make sure that we are now following quarter one with a good quarter two. When we look on the market, and you will hear more about that from divisions, so I will keep it short, but in general, a solid demand. I mean, if you look on the growth number, they are really, really high. So if you look on the green industrial transformation generates a strong demand across AFRY's different business areas. However, we can see, of course, in the infrastructure, in the real estate segment, high interest rates and inflation. That is a segment, the real estate, where we have seen clearer signs of a slowdown. And we can also note in some segments in the industrial segments, a bit of slower decisions to approve big capex projects. But in general, I would say that there is a strong demand. But as always, we need to be very, very close to the market to adjust if market is slowing down. I mean, we can also note, and there is a very strong report period, so many companies are reporting quarter one, and many companies are reporting record quarters. So still, it's a favorable market, but some segment we need to watch carefully, like the real estate segment, and make sure that we handle that in the best possible way. I will not spend so much time on this because each division will talk about it. But as I said in the first slide, I'm super happy that all divisions improved the EBITDA margin compared to a year ago. And you can actually see on the slide that all divisions also delivered solid or even strong growth. I'm happy that Infrastructure division is now have improved the margin, and we can see effects from the work, all the hard work that the division have done. Malin will talk more about that. Industry and Digital Solutions, about 10%, also very good performance in the quarter. What I would like to highlight, Process Industry, delivering about 14% in margin. Super good performance. Energy, another quarter, about 10%. AFRY X have taken a step forward, also an effect, of course, from the change we have done then with less investment in the products and now focusing on our service business, which is the core business. And then finally, Management Consulting, as always, delivering solid margin and also good growth. So this is a quarter where all divisions have performed, and that ended up in 10% from the group, which we are very happy about. We are bringing in a lot of good projects, just highlighting 3 of them. The first one is a project in Denmark when we are supporting the Danish railway with a lot of technical services. It's a frame contract. The second one is a cool project, APK in Germany. It's a new plant that will recycle up to 40,000 tons of plastic, and we are partner to that project. And finally, Ande. That's a project in Paraguay for an existing power plant, where we are then working to increase the efficiency from that hydro plant. So 3 very good projects as an example of all the good projects that we have brought in during the quarter. And with that, I would like to invite our CFO, Bo Sandström, to take us through the numbers. Welcome, Bo. Great.
Thank you, Jonas.
Great to have you here. So I will leave room for you now to take us through the numbers.
Thank you. So again, I will then cover main financials for quarter one, as presented yesterday, but with some more words here and there at least. So let's start, so we'll follow the flow on sales and then on to EBITDA development, on to balance sheet and cash flow items. But I'll start with the sales part. So total net sales almost 7 billion in the quarter, and we are approaching, on a rolling 12 perspective, we're approaching 25 billion with this quarter. So it's a huge step for us. 22% total growth, almost 16% adjusted organic growth. Fantastic sales development, I must say. It was the 3rd quarter in a row with these type of growth levels, but what was even better than what we've seen the last couple of quarters was that the adjusted organic growth is now at a rate which is almost on the level of total growth. So of course this is supported by increasing number of FTEs. We have price adjustments as well, and we calculate that we have approximately 5% in price increases in the quarter. That's somewhat up from the last couple of quarters where we have been at more 4% level. So that's a good step. Also going into salary increase season that is coming up. It's ramping up in Q1 and it's imminent in Q2. So on the order stock side, also linked to the sales, we see a continued strong development. We're at almost 20 billion, and that's up 14% from the corresponding quarter last year. 14%, still a healthy level, but somewhat lower than we've seen the last quarter. So the order stock could keep developing, at a good rate, but at a somewhat slower pace. So everything good on the sales side. Looking then on the EBITDA side, also a fantastic chart. As you can see, reporting 689 million in the quarter on EBITDA. By far a record quarter in terms of EBITDA. Also on the margin, even with the strong growth, 10% is historically a very, very strong quarter. So in that sense, there was no surprise that we in that sense beat expectation from the market with this quarter on the result perspective. Corresponding margin last year was 8.3%, so an increase with 1.7 percentage points. That was then driven by 2 kind of outside factors. One would be the calendar, and the other one would be lower sick leave effects. Adding those type of reasons together, they explain the measurement. But that's how you really should understand the margin. So then, that said, we have struggled the last couple of quarters to carry the growth onto margin. I mean, rationally, you should actually be able to combine a very strong growth with even increased margin. I mean, you get scale effects on SG&A typically when you're able to grow in this rapid shape. Instead, last couple of quarters, we have actually deflated our EBITDA margin. So this quarter, big step forward, we actually are able to carry the margin, even with the strong growth. But there is a reason to argue that there would be even more potential in the margin development just by looking at the strong growth that we have. That said, good step, but more to go in that sense. Breaking this down into division, this is of course a super happy picture, I must say. And why is it so? Well, it's actually looking across AFRY, looking at the 6 divisions. We have strong adjusted organic growth in all divisions. It's improvement on adjusted organic growth in all divisions. And we have margin improvement in all divisions. So that in itself, and then you can rationalize about each of the division, and I agree with what Jonas said, it's particularly strong for Process Industries this quarter. But I think from an AFRY perspective, then the best thing about this is that all the divisions are providing a solid quarter. We're not hampered by one single division that is carrying us down, in a sense financially. And I think if we can continue on that path in itself, that will provide a great pathway for a good year for us. So again, and I just wanted to point out on a divisional level, the margin, the calendar effect that we have on AFRY as a whole, it actually plays out a bit differently for the different divisions. So even though we calculate that we have approximately a percentage point on AFRY total on EBITDA margin effect calendar-wise, it's actually, for instance, marginal on the energy side, whereas it's higher on the more Swedish-centric divisions. It depends on your geographical footprint and your level of sub-consultants, to name a couple of dependencies. So this is how we performed on sales and on EBITDA. That's the typical parameters that we follow most closely, and this is where we performed in the quarter. Let's look at where we didn't perform. That takes us to cash flow and financial position. So cash flow, on the left side, you see operational cash flow in the quarter in millions of SEK. So typically this is what's left in our account when we have paid, when we have provided the result, we paid the wages, we got the fees that when we actually have them on the account. So typically, it's to be understood with the net result that we have in the business and the working capital that we bind on the business. So why is this where we not performed? Well, as you can see, we have 54 million left extra in the account in Q1 2023. And it's actually a couple of 100 million lower than last year. And this is then for a quarter where our result level was a couple of 100 million higher than the corresponding quarter last year. So we're building a lot of cash, significant difference from what we've done before. And that's something that I've already gotten tons of questions about. If you look back, and we didn't talk about it that clearly in Q4 because there were other things to talk about that then, but this is not something that is new for Q1. We could see it in the later part of last year. This is clearly our weak spot in the quarter. We can see, from the top that we are building capital. We're binding capital on work in progress, and we're binding it on accounts receivables. But we're continuing to analyze this. And this is an area which we, for many reasons, because it's really eating all our cash flow for the business, which has massive consequences. But this is something that we have to, further analyze, and we have to address it in the quarters to come. Leaving that, looking at the next one, that's financial net debt. Some increase, a few hundred millions, but that's driven by the deterioration of operational cash flow on the left. So nothing dramatic in that sense. We still have very strong liquidity, now at approximately 4.2 billion. That's our, in that sense, available liquidity or available cash. Rounding off, reiterating our financial targets, I will get back to these. These were reiterated at CMD approximately a month ago or so. So we have 3 financial targets. Here you see an update on how we perform in comparison to the target level, and we measure it on a rolling 12 perspective. I will reiterate it quarters to come. On growth, we are still above target level, and we continue to increase, now at 19% annual growth level in total. On the right, you see our leverage, which is our debt situation in that sense, and we deleverage, which is good for this quarter, driven by the strong performance on EBITDA, which is the driver here, which follow the EBITDA very closely. In the middle, anyone who saw CMD concluded that this is clearly our weak spot. From a low point of 8.0, we actually took a step up to 8.5 on a rolling 12 perspective with a Q1 result, really strong. But you should consider that approximately 0.3 of that movement was related just to calendar effects, and that will be reversed in Q2, where we have approximately the same calendar effect, but in opposite effect. So that's where we are, a bit balanced Q1. Mainly, I would say we're delivering on sales, we're delivering on EBITDA, particularly also on the margin. We are struggling on our cash flow generation, particularly working capital. But that's something that we will come back to in quarters to come. That is all from me. So I'll leave back to you, Jonas.
Thank you, Bo. And just as you said, Bo, a strong quarter on sales and EBITDA, and the fact is with cash is also something we need to be able to continue our acquisition journey.
For sure.
So in the board discussion, of course, when the cash is not generated, we will also down the road have problem to continue with our M&A agenda. So cash we need for many reasons.
Yeah, I mean, we typically we take the cash that we generate on an overall perspective. We try to develop it in half, divide it in half. Half we distribute in dividends, half we use for our M&A agenda. And with the rate that we're looking at right now, we barely generate cash enough to pay the dividends, in a sense.
Yeah.
That's for the last couple of quarters.
Yeah. All right, so that's one focus, and then of course to continue to keep that positive start that we have had now for the first quarter into the second quarter. But thanks a lot, Bo.
Thank you.
Then we will then, from that overall summary from me and from Bo, we will invite the divisional heads. And as always, we will start with the infrastructure and Malin. But before that, I will just shortly just remind ourselves on the strategic framework we have. This is the one that we presented on the CMD, where we have clustered the business in 3 clusters. 3 divisions in the first, we have infrastructure in the middle, and then we have industry and digital and AFRY, and then supported with a strong focus on operational excellence, how do we make sure that we can attract and retain the best employees, and also then how do we improve client value. So this is something that we will continue to work on and talk about a lot, and again to execute on the strategy. That's really where we are right now. So with that said, I will invite Malin on stage to take us through infrastructure's development in Q1. And congrats, Malin. It was a clear step forward.
Absolutely.
We saw that you improved your margin even with calendar effect help. So congrats to the team, and the stage is yours to take us through the numbers.
Thank you, Jonas. Jonas said earlier that it's a lot of hard work behind the figures, and I agree. And with that said, I would like to start to thank the team, because it is a lot of hard work, but also a lot of effort behind the figures that we can see in Q1. So a big thank you from me to you. And I think also a big thank you to our colleagues, because we have never done so many good tenders and business together also over divisions. So let's start with and continue with that, I think, overall. So I'm really happy and proud over to see that the margin is going in the right direction, as you said, Jonas. And as presented also on the Capital Market Day earlier, we have a very, very clear agenda to improve the margin. And this was the first steps in that direction, and let's continue on that. So we are doing in this. But we are also very happy to see that the order stock has been stable and has also improved in all countries. So I think overall, a good also sales momentum overall. One other big important factor, not only for the net sales, but also for the margin, is also that our attrition rate continues to move in the right direction. It's being decreased during the quarter. So that is also a lot of work behind that, because I know that you as leaders have been very close to your teams to ensure that. So overall, the growth is good, and a good step in the right direction as well. Moving then over to the EBITDA, amounted to 253 million compared with 183 last year, which is corresponding margin then to 9.8%, and versus last year that margin was 8.2%. And saying that the 9.8 is within the corridor that we announced during the Capital Market Day. And this is where we want to be, and this is where we need to be. And we will then do our utmost to keep this level moving forward. And looking into the margin then for Q1, it was mainly impacted by the cost program that we performed last year, but also the calendar effect that also Bo talked about, and some operational improvements that we have done also during the quarter. So a very strong EBITDA margin, especially, and I will mention then 3 BAs or countries. That was Denmark, Switzerland, but also Central Europe. So, and almost all BAs also showed an improvement versus last year on the margin. But especially, I think that Denmark, Switzerland, and Central Europe showed a very big improvement. One of the more noticeable challenges that we have had during the quarter is related to the market. And we have seen the signs for some time of a slowdown within the real estate segment in Finland and Sweden. And now it's really here. So we have also worked quite hard with reshaping, moving from more of the residential and commercial segments into more hospital, education and healthcare, where we can see that it's still growing. But overall, we have a solid underlying demand on the transport infra market and market in general. So a lot of good things, and I think that this is also what we can build on further on. And Jonas mentioned one of the top 3 items, or a lot of good orders coming in. And Jonas mentioned earlier the one in Denmark, but there are several. So this is also something we are looking forward to work with even bigger and larger projects ahead. So big thank you from me to you, and over to you, Jonas.
Thank you so much, Malin. And again, good work from the infra team, and let's keep that trend now into Q2.
We will do our utmost.
Yes. Thank you, Malin. So that was from infrastructure, and then we are moving over to industry and digital, and Robert will join us digitally because he's in Denmark visiting a client, I know. So let's see, Robert, are you there?
I hope you can hear me also.
We hear you. Great to see you. I hope you have a good meeting today with a client. We are happy that you are out there bringing in new orders, Robert. So with that said, I will leave the floor to you then to take us through Q1 results for Industry and Digital Solutions.
Thank you, Jonas. So, with the challenges in the Q4 of last year, still fresh in mind, I think it was really satisfying to see that the IDS team in the Q1 of this year could manage to convert the growth in net sales into first higher profits, of course, but also higher margins compared with last year. So profitable growth means that is the essence of profitable growth. And in this quarter, you could say that we were 3 out of 3. Now, there was this calendar effect that has been mentioned before, helping us also a bit in Q1. And out of the 38 million increase in profit versus last year, 13 million came from 7 more hours compared with the previous quarter. Now, with an outside-in perspective, markets were continuing favorable in the Q1. The growth was driven very much by the manufacturing industries, up 31%. We saw that the defense spending that has been talked about a lot in Sweden the last years is actually kind of really now coming into the markets. So defense was up 29%. And we also continue to see robust growth in automotive industries with 21%. So all in all, the division reported some 13% adjusted organic growth. Continuing with outside-in perspective here, orders were up 11%, and the rolling 12 months is now at an order intake of 5.6 billion, which is supporting the budget ambitions for 2023. But at the same time, we see that some of the clients are a bit of reviewing their plans going forward. And while the markets overall offers good opportunities also going forward, I think it's fair to say it is not as hectic as it used to be a while back. Pricing has now for some time, I would say, been a key topic, and also in the Q1 of this year, average fees was contributing positively. And by now, it is very clear to all of us that inflation is not going away anytime soon, and further pricing increases is really vital to protect the margins going forward. Luckily, this is at the very core of operational excellence, and with the help from, lots of effort and attention from management, but also some new systems restoring transparency, we believe that we will be able to continue on this track. So to conclude, or finally, I repeat this one more or less every time, but at IDS, we stay firm with our view that business is a team sport, and that was really demonstrated at our meeting with Novo Nordisk today here in Copenhagen. And we continue to believe that the best is yet to come. Yeah, and this all you understand, this is an ambition, but it is also an attitude telling us that whatever we do, it can and should be improved. So I think those are the key messages from IDS, Jonas. And I want to say a warm thank you, not only to the IDS team, but all colleagues at AFRY.
Robert, great to hear. Good that I'm happy that you have good meetings with clients, Robert. And what I'm bringing with me now, or us, is that with 10% margin, 15% growth, the best is yet to come, Robert. That feels very good. Super, Robert. Have a good day in Copenhagen. Safe travel back later today, and have a good meeting. So from IDS then, we will move over to process industry, and Nico is joining also digitally. And I will leave it to Nico. So hi, Nico, are you there? Hi, Nico.
Hi.
Hi, and I will leave it to you to take us through the numbers. But of course, as also Bo said, all divisions really performed well. But you know, there is always one star. And I would say in this quarter it's absolutely you guys. I mean, first of all, you have been rock solid over many quarters. But to be able to deliver about 14% with strong growth, Nico, when you also have become a really sizable business, actually being close to 5 billion on yearly run rate in revenue, that's a really good achievement. So congrats, Nico, to you and the team. And with that, take us through the numbers in process industry, Nico.
Yes, thanks a lot, Jonas. And as Robert says, this is a team sport. So as a team, we can succeed, everybody. But yes, indeed, quarter one, we managed to do a super good result. And it's because of this, of course, amazing team members, but also the global cooperation between the units in the PIT division, but as well with other divisions. With Malin, we have many projects together with the infra side and with other divisions as well. So this is team sport. But of course, this result was enabled because of the good project performance and also high utilization throughout the division, and also by good cost control. So once again, thank you all for this work what you have done. So the net sales in this first quarter amounted to 1.4 billion and increased by 32%. And the adjusted organic growth was 22%. So really great numbers. And the growth was mainly driven by good workload with a healthy project portfolio and big CapEx projects in North America, like Sappi Somerset to mention, and also Latin America, and in Finland, Stora Enso Oulu to be mentioned, but also Central Europe, many CapEx projects. And also when we compare to last year, so these some projects which were in challenging phase, so they have now been completed, and they are of course reflecting the comparable figures last year. And the EBITDA 199 million with a record high margin 14.2%, as you said, so really good. But the thing is that we should always continue on this level when we have now achieved that level. But when we look forward, we can see that the market activities continue to remain on a high level, but there are some clouds also in horizon. So currently pulp prices, they are decreasing, and also other uncertainties in the market are causing challenges for the pulp and paper companies, like for example Stora Enso, who said that they will cease the investments now for a while. And also other companies are saying that some of the investments are being postponed. But of course there are as well then companies who are investing now. So that's of course important for us. But also in Brazil, which is a big entity for us, the political situation is causing some challenges as well. But again, then we have again the possibility to work globally and use the Brazilian great resources in the North American projects. And this is again showing the strength of this global operating model and resource sharing between the units, and that can be balanced then also throughout the different other sectors, like in this green transformation and the mining and metals projects, what we have then in the Nordics. Then these projects in these new sustainable technologies and solutions like this battery sector, Power-to-X and plastic recycling are rapidly increasing. So there is not a big impact on those. And we are in the front line to support our customers in this area. And also there is an increasing demand for water management services and efficiency improvement services, and then as well these digitalization services. And we have this technology and digital competence, which again strengthens us to deliver good quality to our customers. But then one topic. So today we have this World Day for Health and Safety at Work. And this is an annual event organized by International Labour Organization of United Nations. And of course, this health and safety is part of our daily operations and integrated to all of our activities. And as a reminder, so we have over 200 specialists working around this as well for our customers. But today I want to highlight the importance of health, well-being and safety and remind that it is everyone's responsibility. And we want, of course, that all of our team members can work in safe environment and we have common targets to have to achieve this 100% safety in all of our operations. So this is, of course, that we care of our colleagues. But again, great work. Thank you all divisions. So this is team sport, and with these works, let's continue the good work, and we have great prospects ahead of us. So back to you, Jonas.
Thank you so much, Nico, and rightly said, with health and safety, of course, always a priority. So that's well said. And then I just want to pick up on that, Nico. I mean, pulp and paper segment where we are really strong, actually #1 leader. And as you said, with the pulp prices, and there are some clouds that you could see. So I guess for all of us, how we can expand then with process industry knowledge into those sectors where we actually can see if it's mining and metals or hydro, power to X or batteries. And I think you have done a great job then to also expand into other sectors that can balance if we would have a dip in, for example, pulp and paper. And I think you're doing that very well. And secondly, then this collaboration, and Malin also mentioned it, of course, that's one of the strengths that we need to further, increase the way we can work together between divisions, of course, between business areas, between countries, because that's really when we can get the absolute best strength out of AFRY. I'm super happy that you mentioned that, Nico. I know that we have quite a few projects when you work cross divisions now, and that makes us, of course, very strong. So thank you, Nico, again, and congrats to you and to the whole team in process industry for a great result. And we keep our fingers crossed that we will continue into the second quarter with equally a strong result. Now I will invite Linda on stage to talk about energy. So welcome, Linda.
Thank you, Jonas.
And congratulations also to you. It was another quarter, about 10% in margin. I can't count now, but it starts to be more than a handful.
More than the fingers,
and also strong growth. So congrats, Linda, and the whole team. And the stage is yours to take us through the numbers.
Thank you. So happy to be here. Yes, as Jonas said, Q1 was a very good quarter for the energy division. We improved basically all the KPIs compared to last year, both in terms of revenue, EBITDA, and relative EBITDA margin. And growth, yes, very strong growth, 24.7%. And even when you adjust the organic, adjust the growth, for us it's basically about the FX impact. You still end up with adjusted organic growth of almost 15%. And of course, the growth was driven by the underlying demand in the market within both production, distribution, and storage. And actually, all our BAs had very good growth this quarter. Part of the growth in BA Renewable and Thermal comes from the acquisition of Blix, which Jonas also mentioned. Blix is now part of our numbers as of March 1st this year. And I had the privilege to meet our new great employees at Blix in their very cool office outside of Amsterdam. So again, a very warm welcome to this team. I think we will do very great things together within especially the offshore wind segment. The order stock is at a continued high level, actually a new record level, also in March this year. And we are continuously awarded projects and assignments around the world. And I would like to give a couple of examples just to show sort of the spread of our portfolio. So in the month of March, we have, for instance, working with 4 gigawatt offshore wind farm outside of the Netherlands, where we provide expert support. We are exchanging control equipment for steering and monitoring of hydropower plants in Sweden. We are doing a pre-feasibility or feasibility study for a large green hydrogen production facility in Indonesia. And this is one of the examples of the many projects that Management Consulting Division and we are doing together. So we see a great development also working together with these types of projects. We are the owner's engineer for 8 solar PV projects in the UK. And we deliver design services to modernize the local grid of Umeå Energi. So you can see there it's a combination of assignments in all areas, in all parts of the world. When it comes to margin, 10.5% improvement compared to quarter last year. I would say with positive impact by very tight cost control. And I would like to compliment you all on keeping this very important KPI under control. It was also, of course, driven by a strong performance. And this quarter, I would like to mention, especially in nuclear, they had an extraordinary quarter, Q1 2023. So congratulations, nuclear. Well done. The only worrying KPI, I would say, for us is the utilization rate. And here we need to put some more action into place. And we are closely monitoring this to also get that KPI under control. But all in all, the general outlook for the energy sector is strong. We see increased investments in renewable energy in Europe. And they're actually expected to increase even further this year. All in all, to summarize, very good quarter, improvement in sales, improvement in EBITDA and in margin. So a big warm thank you to the whole energy team. Back to you, Jonas.
Thank you, Linda. Thank you, and again, congrats to you and the team. And just to building on the utilization, I know that you mentioned it, so deliver 10% still the utilization. And I think this is also something that for the total group, we were 1% unit lower in utilization. And this is something that also, we talked about cash flow as one weak spot. We are happy that we improved the margin, but utilization is something that I think we need to look at across divisions, cross BAs, it differs. So that's one other area where we had quite a few questions. How come that utilization is going down? So what can we do to make sure that all our great consultants, employees work on assignments? But again, solid quarter. Congrats, Linda.
Thank you, Jonas.
So with that said, I will then invite Per Christian to talk about the AFRY X that did a step up, I have to say, delivering 7.3% in EBITDA margin. Of course, a lot of restructuring, but Per Christian, the stage is yours to talk about AFRY X during the quarter. Sorry.
Can you hear me?
Yes, now we hear you, Per Christian. So, stage is yours.
Many thanks again. We have for sure seen extraordinary change over the last time or last period, and we definitely look forward to environments of more stability, and I fully trust that is exactly what we're embarking on. The total sales of AFRY X in the last period, I can't see the slide now for some reason. Thank you. The total sales of AFRY X over the previous period landed at 340 million SEK, which can be compared with revenues of 303 million in a corresponding period last year. And this translates to a total growth in order of 12%, or around 7 measured as adjusted. And this was largely fueled by successful price increases, but also very good growth at some of our key clients, including Ikano and Apple. So a huge congrats to you guys who made that happen. The total EBITDA delivered during the last period was 26 million, corresponding to a margin in the order of 7.5%. And whilst this is a significant step up compared to last year, it is still a matter of fact that we are significantly below our target. So to everybody at AFRY, of utmost importance for us in the quarters to come is to keep on pushing sales to be able to up our utilization levels. And looking ahead, we see that, we see signs suggesting that sales cycles in the industrial sector are growing longer. But we also see that there are still great clusters of huge untapped potentials in areas such as cybersecurity and BI, and this allows for significant growth, and I certainly trust that we will reap our share of that. So all in all, we expect that it is going to require much more hard work in sales to be able to deliver the volumes we need, and that is exactly what we will be putting in over the next quarters. Many thanks, Jonas.
And let's push for, as you say, sales. And I guess the good news that there is still an underlying need for digitalization in the industrial segment, but also other segments. But this was clearly a step forward in the kind of adjusted position for AFRY. Thank you, Per Christian. And then last division out, another division, Roland on stage, that again delivered a solid and even, you know, a good quarter. I mean, if you look on the numbers, what to say? Close to 14% and growing. So congrats, Roland, and the whole team in Management Consulting. And the stage is yours to take us through the numbers.
Many thanks, Jonas. And as you are saying, the first quarter in the year was another important quarter in our growth journey. And I'm super happy with the numbers we are showing one quarter after the other quarter. And looking at the performance, both in terms of top line growth, but on the other hand, also in the underlying bottom line contribution in terms of EBIT, I'm really impressed by the development of the entire team, because I know how much hard work, dedication, bravery, new ideas, but also collaboration with the other divisions is necessary to show these numbers not only in a single quarter, but one quarter after the other. As you know, we are working in two very exciting sectors, in the energy transformation and the transition in bioindustry, where of course we see a lot of demand coming from the changes. Think about the energy sector on one hand, to decarbonize the entire energy system, to provide clean energy for industrial decarbonization, but of course also to look at all of the challenges, because since more than 12 months we are now in a new situation in Europe. So we have also to focus on stability, security of supply, and this of course is also driving the demand, because, you know, as a consultant it's always good to have some uncertainties, but also developments in the market. On the bioindustry side, we see of course also a demand, especially in this new areas, knowing that the bioindustry sector is playing an important role towards sustainability, biofuels, biomaterials, novel bioproducts. And that's also nice to see how the work we are doing in energy and bioindustry is coming together, for example, in the fuel area. Our 4 areas: forward-looking market analysis, strategic advice, operational excellence, and transaction services, we are able to grow the business along all of these 4 areas. And this is of course something what we are doing in our core sectors, energy and bioindustry, but step by step, we are also going into connected sectors, like in industrial decarbonization, in future mobility, just to name a few of them. And therefore, I'm really happy that we are fully in line and on track with our strategy to strengthen our market position in the countries where we are operating already today, to take a strong position in new service areas like hydrogen, in novel biomaterials, in wider sustainability consulting, and also making step by step more work and developing new services in connection, for example, with AFRY X in digitalization. We are driving our international growth agenda, and it's good to see that we are strengthening the operations in the US, that we are building the platform in Southeast Asia, that we have now started with a team in Australia, because of course the transitions we are working on is a global transition, both in energy and in bioindustry. So therefore, once again, many thanks for all the work within the division, but also many thanks to the great collaboration within the wider AFRY team.
Super, Roland. Thank you so much. And again, congratulations. And I know that we are setting quite some ambition now for management consulting moving forward. You are roughly 600 employees now?
Yeah, 600 plus. And you know what we are dreaming of.
Yeah,
so
we share the dream.
We share the dream.
Yeah. Cool, Roland. Again, congratulations to the whole management team, management consulting team. Again, a very strong quarter, and we will for sure make our utmost to be able to fulfill the dream, Roland, and grow and becoming, you know, an even bigger player on the market. And I mean, I was saying yesterday evening we had a good dialogue with our chairman, and of course everything that is going on in the sectors energy and in the bioindustry, we have a clear role to play. So we will do a lot of work to try to grow our business further. So congrats to a good quarter. So then, just wrapping up. First of all, wanting to remind you of saving the date. We have a team players meeting on 24th of May. So this is when we really will gather our teams and the colleagues across AFRY, all the 19,000 fantastic colleagues, to a team players meeting. So make sure that you spread the message. We will really try to energize our team in that meeting and make sure that everybody is equally as proud as I and we are of what we are doing at AFRY. So 24th of May. Then before I do the final wrap up, just you know, sustainability, which is actually in the core and in everything we do, and we are getting a lot of recognitions for what we are doing at AFRY, now being 19,000 colleagues. Just wanted to highlight one that we received earlier this week. Financial Times, they present a list every year in Europe of, I would say, they call the climate leaders in Europe. And we at AFRY, we are now, we are on that list as one of the most influential companies that are on the ranking of climate leaders. And we are, not only that we are high up, we are on the top 50 of this 500 list. And in Sweden, there's quite some big companies in Sweden. We are on the top 5, and there are really strong companies also playing in the area of sustainability, Tetra Pak, Ericsson, and others. So we're really proud of the fact that the work we are doing in sustainability, which is actually the biggest work we are doing, is all the assignment we are doing with clients. But of course, also how we deal with our own operation, how we can reduce emission from our offices and traveling. We are really proud of that, and actually you should be really proud of that too. And this is just one of the recognitions that we received, that actually also from the outside, they see what we as AFRY can do to support the transition into a more sustainable society. So congratulations to that. So then finally, we will not have time for questions, but I want to thank you all. I hope you have seen that we have a really good start of Q1. Now, it's a long time, actually a couple of years back, since we had such a good start of a year. So now for all of us, it will be to be very focused on the months to come, so we can follow up Q1 with a solid Q2. And I know that you are doing that, so strong focus on operation, Bo mentioned a couple of weak spots. We talked about cash flow, for sure, that's one. Utilization, of course, is key in a lot of things. So just remember now, every hour counts, and let's bring in the assignments. Just use collaboration across AFRY. We always said that if we are selling something and if we can feel that we have 19,000 colleagues backing us up, we can basically sell and deliver everything. So let's keep focused on operation improvements for the second quarter, and that we can follow a very good start of the year with a good quarter two. But again, thank you guys for all the support, for all the good work, and thank you for watching today, and I wish all of you a really nice weekend, and see you soon again. Thank you so much.